Comes a time in every agency's journey where they just need more financial support. You've just had 3 consecutive good months in a row. Revenue's up, clients are happy, you've got new team members coming on board, but you still have that nagging feeling in the back of your head that you don't fully understand how much tax you're going to pay, whether you can spend the money in your bank, and how you're going to make your new increased payroll bill. If that feels familiar, you're not alone. In this video, I'm going to show you exactly how to know when you've hit that point, and more importantly, what you need to do next. My name is Rayhan. I'm a chartered accountant and agency CFO. And over the last 5 years, I've helped hundreds of agencies break through the barriers that stop them from going to 6 to 7 to 8 figures. In the next few minutes, I'm going to show you 5 signs that you need to up your financial game to break through that ceiling and hit the next level. Let's clear something up. Not every accountant was made equal. Most people start with the basics because that's all they need: an end-of-year tax return, maybe some help going from sole trader to limited company, and then getting that registered. So that basic accounting is like having a paper map. It's giving you a snapshot of your performance at the end of the year, but it's not telling you how things are going throughout the year and how they're changing. More importantly, it's not showing you what you need to do to navigate those changes so you're never far off track from your goals. Think of proper agency accounting as Google Maps. It shows you real time where traffic is, it reroutes you, and it ensures that you always get to where you're trying to go as quickly as possible. It also helps you to avoid dangers along the way and shows you where there are opportunities to get there quicker. It's the difference between knowing your revenue and how much you have in the bank today compared to knowing how profitable and how much money you're making on each service or client. The difference between hoping you can afford that next hire and having confidence when you do pull the trigger that the timing is right and you can actually afford it. The best part of all of this is you can avoid hiring a full-time finance person or £100,000 a year FD and still get everything you need for your business. Most agency owners are spending far too long getting strategic about their finances. They feel like they need to hit some magical revenue number first, or they usually look for it when it's too late and they're already experiencing the pains. Here's the thing: by the time you're absolutely certain you need to up your financial game, it's probably too late. You've missed out on months or even years of opportunity. So here's sign number 1 that your finances are holding you back. You're growing faster than your systems can keep up with. But you're winning more clients than ever and revenues are up, but every single month it feels like there's less and less money in the bank for you to pay yourself or to reinvest in the business. Here's what's really happening. Your basic systems of spreadsheets were fine when you were doing 20K a month. But as you hit 50 and 100K a month, those systems can't keep up and you're losing track of how much money you're making per client, per project, and you're losing track of what's happening in the future, which means you're making decisions based on your gut feeling rather than data. The truth is, growth without systems that give you that level of insight to make good decisions often leads to you scaling a business and having more work but less profit. And number 2 is cash flow feels like a roller coaster. Once you're on top of the world, you've got 6 figures in the bank and everything's good. Next, you're scrambling to make payroll because you had a bunch of costs that you didn't factor in that have eaten up all of that cash. This is probably the most stressful sign for an agency owner, when you can't pay the team that relies on you for their livelihood. And money isn't even the root cause of this problem. It's about unpredictability. Here's what it often looks like. Your client payments are irregular, so you don't have any predictability around when they're going to pay that invoice. Project timelines keep moving and you can't invoice for the work because you're waiting until it's closed off. And you're never quite sure about where that next big invoice is coming from. But here's where it's really dangerous. Without predictability, you're making decisions based on how you feel in the moment. That's not a confident decision towards growth. That is spitballing and hoping something sticks. To get off the cash flow roller coaster, the first thing you need to do is to have a forecast in place. Now, your cash flow forecast will show you what your bank balance is predicted to be in 12 weeks, in 6 months, in 9 months, in 12 months. That way you can say, okay, if I make this decision to hire this person today, I know I can still afford my tax bill next month. I can still pay the existing team. And I know at the end of the year, my bank balance is still 6 figures. Or maybe you plug your numbers in and realize that you actually can't afford to hire that person that you were about to, and instead you opt to go with a freelancer. This is exactly what your accountant should be talking to you about, not your end-of-year tax return. Number 3 is you're always reacting but never planning. Every day there's a new fire that you need to put out and make decisions around. That might be your team asking if you can cover an expense. It might be you wondering if you can pay yourself some money out of the business to take your family on holiday. Or maybe you're wondering if you can invest in that new coaching program. All of these decisions are made in the moment, which is reactive and emotional. By planning in advance, you would map out and have budgets for each of these things. So when you're asking these questions to yourself or your team are asking you them, you can refer back to your budget and plan and say, yes, this fits within what we'd planned for the year, or no, it doesn't fit and therefore we can't do it. So if you feel like you're stuck in this reactive trap, wait till the end because I'm going to show you how you can get a free resource that we use with our clients to help map out the next 12 months so you can make every single decision with confidence, knowing that it still leads to profit and cash in the bank. Sign number 4 is that your tax bill is always a surprise. Every year you're presented with this mystery box where you open it and you could be getting a tax refund, or you might be asked to pay £50,000. Sometimes it's okay, you've got cash in the bank, but sometimes it just isn't, and you have to scramble to try and figure out what needs to happen to pay that tax bill. Here's the thing about tax, it should never be a surprise, with no exceptions. The mistake you're making if it is a surprise is only thinking about tax at the end of the year, missing out on key deductions, so just not understanding how you utilize your company in the best way, and not structuring things tax efficiently, because what worked for you at 10 or 20k a month will not work for you at 50 or 100k a month. Just last week, we onboarded a client who had scaled rapidly to 50k a month. During that period, they'd stuck with the same accountant who was just filing their end of year returns and then added VAT on at some point. They asked us to do a full review of their books for the year because they weren't confident in what had happened. And when we did that detailed review, we found £6,000 of VAT that they had paid to HMRC that they didn't need to. So we were able to reclaim that, and that's on a single invoice out of thousands and thousands of lines of transactions. Here's the reality, this happens for almost every client that comes on board. And the reason is because most accountants out there are not looking at your books in any level of detail. They just want to tick that box and file your paperwork at the end of the quarter or the end of the year. By having proper systems and bookkeeping in place, you're able to switch the script to have full predictability over what your tax bill will be in 12 months' time, what your estimated VAT bill is, and what your personal tax bill might be. And when you know these things in advance, you can proactively work to reduce your tax bill before it's too late. Sign number 5 is that your financial reports don't tell you the full story of your agency. If you're looking at that spreadsheet you update manually every month and thinking, I still don't understand what this means for the business, then this is for you. Basic reports will give you numbers that tell you where you've been, what you've spent, but they don't do anything to tell you about where you need to go or what decisions you need to make. Let me share a recent client story where the data was presented differently, meaning that they were able to actually understand it and make a big decision on the trajectory of the business. So this graph is a KPI we built for this client who was investing in marketing spend and wanted to understand the impact that spend was having on the business overall. When we plotted these two numbers together, marketing spend and revenue growth, we found a very interesting trend. They were spending more and more on marketing, but their revenue was in decline. So they were spending more and more on marketing, but actually making less and less money. They didn't realize this was happening. Part of the reason they didn't realize is because they were only looking at one small element of their marketing rather than classifying everything as growth spend collectively and measuring that against the overall business top line. So if they were just looking at a spreadsheet, they wouldn't have noticed this trend. Some campaigns and some strategies were working, but others weren't. And the net impact overall is that their marketing just isn't effective. With this data, they were able to revisit what they were doing from a marketing point of view, dissect everything, and make some tweaks and optimizations, which we then continued to measure and resulted in positive revenue growth against that growth spend. So look, these 5 signs will show up in your agency at some point, and sometimes they all come at once. And the problems tend to scale as your agency scales. So fix them early. The good news is recognizing these 5 signs is the first step towards transforming your agency's finances. So when do you make the move from that basic accountant to someone who can actually tell you how to grow your business? Well, if your agency is making anywhere from 10 to 20k plus per month, that's probably the time where you're looking to make decisions about hiring and significant investments that will lay the foundation for the future of your business. This is the time to get strategic financial support. Now, I also promised I'll give you a financial planning template to help you get visibility and to stop being reactive about the decisions you're making in your business. There's a link in the description to our financial planning template that you can download for free. This is the exact tool we use with our clients to help them map out their next 12 months in as much detail as we can so that they can make great decisions that grow profits and grow cash.